Wall Street celebrates new records. What you need to know about market surges and economic shifts. Wall Street experienced a spectacular rally, culminating in record-setting closures for both the S&P 500 and the Nasdaq. This surge was largely fueled by a robust U.S. jobs report and Nvidia's exceptional market performance. But here's where it gets interesting. Nvidia's market capitalization is approaching the staggering $4 trillion mark, edging it closer to becoming the most valuable company ever. Breaking down the numbers, what happened on Wall Street? The S&P 500 rose by 0.83%, the Nasdaq by 1.02%, and the Dow advanced by 0.77%, just shy of its own record. These positive numbers came after the U.S. job growth in June surpassed expectations, adding 147,000 jobs, 33% more than predicted. Plus, unemployment dropped to 4.1%, performing better than the forecasted 4.3%. Why is this important? The robust job figures have prompted investors to reconsider earlier expectations about an interest rate cut, moving the likelihood for a rate reduction in July out of sight. However, the perspective on the overall economic picture remains complex and layered. More to consider: the political and economic impacts. The exciting market surges coincide with the U.S. House's approval of a large tax cut and spending bill proposed by former President Donald Trump. While these financial moves aim to stimulate economic growth, they also introduce significant concerns. According to the Congressional Budget Office, this legislation is expected to add $3.4 trillion to the national debt, potentially impacting millions of Americans' health insurance coverage. Your thoughts? Is the optimism justified? Some argue that despite the optimistic job report, the broader economic outlook isn't entirely rosy. Could recent policies fuel inflation while providing temporary economic boosts? What do you think about balancing short-term gains against long-term financial stability? Let's discuss. Drop your thoughts in the comments below.